I've known Terry for quite a while, since the mid 2019 time period. He moved from the East Coast. He's come from a lineage of many insurance type folk with a deep, deep background. And now he lives in Hull, Quebec. Oh, no, Gatineau, sorry. I rephrase that. And he has his own herd of little mini dinosaurs that produce eggs, as he's fondly mentioned. He's got two great, adorable kids. When they come on the Zoom link, they're just fantastic. And today, Terry is going to. They're not fantastic. Yes, they are. Yes, they are. I've seen them. He's going to be talking about insurance and how to leverage it from a perspective. And I'm going to stop talking. Over to you, Terry.
Thank you, Bernie. And Margaret Ann, it is nice to see you as well. I haven't been on this meeting for probably about 2 or 3 months now, something like that. As Bernie was saying, and Kimberly, yes, the market is saturated with people like this guy. But I really love what I do, and I really enjoy helping my clients move forward in their lives. So I'm going to be talking about PAR today. Participating life insurance policy, aka PAR. There's several companies that hold PAR accounts. Sun Life has a massive one and a very reputable one. So I'm going to talk about that a little bit. Who knows anything about participating policies? Anyone? Nope. Okay. So let's just get started then. Okay, so we're good on that? Okay. So welcome to my world, Sun Life and PAR. So as Bernie was saying, I started 13 years ago. I started with my parents in Moncton, New Brunswick. My parents have been in the industry. Actually, my stepfather finally retired the end of last year after 45 years. My mom was in the industry for about 38 years before she retired. My sister, my stepbrother, they're still in the industry. And there was 2 other women that worked in our office. So my ex-wife now decided that she wanted to have a career here in Ottawa. So 3 years ago, she got a job with the government and we just up and left. So now, I started my own practice 3 years ago. So the 10 years prior, you usually bring over your clients. But since I worked with my entire family, I left all my clients at home. So I had to start from ground zero. That's how I met Margaret Ann. She was with a different company at the time. And our relationship has almost been 3 years long. So I have an office in downtown Ottawa. Obviously, this is not my office, as you can see. I am working from home like everyone else, but I do have an office in Preston Street in Ottawa. I got 2 kids, Nathan, which is turning 6, and Emma, that is turning 10 this year. They are cute, Bernie. I would agree with you on that one. But when you're working from home and you have your kids home, it's a little difficult. So let's dive into a little bit of the history on PAR and Sun Life. So in 1871, Sun Mutual Life Insurance Company was created. Changed its name in 1882. I don't know if you guys knew how old Sun Life was, but it's pretty old. They started the PAR policy right away. So the first one was sold in 1871, and the first dividends on those policies were paid out in 1877. So $4,600 is probably a large amount of money back then, but that was within all of the policies that were sold. Skip ahead to 2017, $799 million in dividends are paid out on an annual basis on par policies. Now that was 4 years ago, so obviously that's gone up quite a bit. The par policy fund itself is managed by Sun Life. It's held by Sun Life and not traded on the market. So Sun Life has complete control on it, and it's worth about $12.1 billion as of 2019. It's gone up to about 12.5, almost 13 now. So how has Sun Life managed to declare dividends ever since 1877? And this also includes going through market crashes, going through World War I, II, the stock market crash. They've always produced a dividend. This is the makeup as of 2019 on what they're invested in this account. So real estate and equities may be a little bit more on the riskier side, but as you'll see, only 30% is invested in that. The rest is in private fixed income, corporate and government bonds, cash and commercial mortgages, which are fairly stable, especially with the corporate bonds and government bonds and fixed income. That's how they can maintain a solid rate of return, which I'm going to show you in the next slide. Maybe not. Okay. This is just a disclaimer on going over Sun Life's investment strategy, the strength of Sun Life Financial, how long it's been with us, the large par account and how it was established. It's just kind of rhetoric that I have to put in this just so that you can see something from Sun Life itself. The smoothing techniques, 25-year standard deviation Sun par. It's to do with a lot of the bonds, the government bonds, as I was saying, that gives it the stability. And moving on. So this is a historical return on the par account itself. So over a 25-year period, now, as I said, the first policy was sold in 1871. So I'm not going to go back that far, but over the past 25 years, let me just get my little Where'd my thing go? Okay, you'll see right here that the 25-year rate of return stands at about, on average, 7.54. Now, if you take into account all of the market corrections that has happened over the past so many years, that's pretty good. And you'll see on this side that these are the rates of returns. Now, the rates of returns are actually closely associated with the interest rates that we pay. So everyone knows that the interest rates are at an all-time low right now, like all-time low. So that's why the numbers kept on going down. 2016, it was 6.75. Where is it? I lost my ability to draw. Hang on. 2016, it was 6.75, and it's down in 2020 to 6.25. Now, that again is all related to interest rates that are upon us right now. As interest rates rise, those returns will continue to grow back up the other way. And those of you that remember how high the interest rates were back in the 80s, early 90s, that's where you're getting these big returns here. Again, it's associated with the interest rates that we have in the world today. This is just another diagram showing how the markets fluctuate up and down, where Sun Life has been just a constant, steady stream, and the rates of return have proved time and time again that that's people want confidence in secure numbers, and these are secure numbers with Sun Life. The TSX, it's pretty volatile, as you can see. You have to know what to invest in, obviously, and that's where people like myself can help you with those decisions. But at the same time, if people want stability, this is one of the areas that I point my clients to. Does anybody have any questions as of right now? Okay. So let me bring the illustrations up. Just give me 1 second. So we're going to look at an illustration of I believe a 40-year-old woman. Okay, so what I've done here is some cases, like our situations with everyone online, we have our own businesses. Some are incorporated, some are not. So this can help your business get money out of your retained earnings. You can use your company to pay for the policy that would otherwise be sitting in retained earnings, and then you would have to pull it out with tax money. Or on an individual basis, it can help supplement your retirement by paying the policy off quickly, letting it sit for a while, then accessing the cash value inside it. And the last alternative is leaving a legacy. So there's some clients that I have that were 52 at the time that they got this policy. They wanted to leave a legacy for their grandchildren, and they had their RSPs maxed out. They had their TFSA maxed out. So there was an alternative to set up a PAR policy. So the gentleman, my client, put about $700 a month into this PAR policy, and it's going to be worth like $600,000 or $700,000 from age 85 and above whenever he passes away. So that's all going to be a legacy that he's going to leave to his grandkids. So we're going to talk about, oops, 1 second. Come on. All right, so I've named her Beverly Hancock. And what we're going to do is you have certain different options when it comes to PAR. You can pay it off in 10 years, you can pay it off in 20 years, or you can pay it over a lifetime. Now, the PAR policy itself is a life insurance policy with this account attached to it. And that's the reason for the explosive growth. So this policy, for illustration purposes, we're paying it off in 10 years. Now, Beverly Hancock, she has a company that is going to pay for this policy, and she's going to pay $20,000 a year for this. Now, do you have to put $20,000 a year into it? No. I guess an average policy in our office is probably somewhere around 22,000. But some of my clients are put in $450 a month. Some of them put in $20,000 a month, or sorry, a year. It just depends on the client and what their cash flow is. So me showing you this illustration for 20,000, it doesn't mean that that's where they start. The policies that I've seen go through our office have gone as high as $100,000 a year. So there's definite value in this. All right, so let me get my pencil back out. So you'll see on this side, the $20,000 a year is being paid. It stops at age 50. Now the policy is paid up and Beverly Hancock does not have to pay a cent into it. Over here is the actual life insurance amount if Beverly actually passed away. So what this really shows you is that by her investing $20,000 this year, if she were to die, her return on investment to her beneficiaries, mind you, is like $370,000. And it continues to grow as time goes on. Now, after Beverly has paid for this, after Beverly has paid for this, at age 60, sorry. Okay, so at age 60 down here, the policy is now worth just over $724,000. So at age 60, I believe I put it at 60, or it might have been 65. Beverly wants to take money out of this policy. So so now when Beverly goes to take out this money, the policy has been paid up. It's now a registered asset. So this policy, she can actually take to a financial institution. Sun Life doesn't do it themselves as of right now, offer this as collateral, but your policy has so much collateral built up into it that a financial institution will take that and they'll put a loan against it. So essentially you're passing in this policy not to give to them, but just for collateral, so that upon your death, you're going to pay back the loan. You're just proving to them that you can pay it back. Every single year, from age, what did I do it from? Just 1 second, guys. Sorry. I want to make sure I'm saying the correct number. Every year from age 65 to 85, she's taken a loan on this policy. She gets out $34,587 tax-free. Now, is that her retirement plan? No, but that is a good supplement to her retirement. That money is tax-free because it's a loan, okay? So if you're taking money from your corporation and your tax dollars, putting your money that you've made into your retained earnings, you can actually pay for this policy through your retained earnings, then switch the policy out to you when you retire, and then get the money out of that policy tax-free. So that's why it's a good retirement strategy for a small business owner. Now, upon death at age 85, the death benefit on the policy has grown to $1.7 million. The loan repayment is 1.2, and after the loan is repaid, the estate still pays out almost $500,000 to the beneficiary. So even though she's received 370 times 20 equals. She's received $680,000 tax-free money from investing into this par account. She's put in 200. So her money has grown. She's almost, well, she's tripled it plus. And she still gives her estate almost $500,000 upon her demise. So that's why it is a good strategy for retirement planning. If she does nothing with it, this policy will turn into a $1.7 million policy for her estate. So she might have tax issues with her business. There's a multitude of ways that I could go with this. And every client is different. So by putting this essentially into effect sooner rather than later, it'll solve your problem of either estate taxes, leaving a legacy, or helping supplement your retirement. Questions?
Hello.
Yes.
Well, thank you, Terry. So that's the power of money multiplying.
It is, and the reason that insurance companies, of course, Sun Life in general, do so well with this type of policy is that your return on investment is pretty high. And Abtin, you are a number guy. My girlfriend put this into an Excel spreadsheet because she didn't believe me. And it blew her mind, the fact that the numbers don't lie. The numbers are there, and she was sold after she had to put it into the Excel spreadsheet though. Otherwise, she didn't believe me.
That's interesting. So anybody got okay, I'm still like looking, going, wow, so 20,000 for that many years, and then 1.7, and like, that's crazy. Yeah, it kind of sounds surreal, Terry.
It does, but
anybody got any questions?
When you actually look at the numbers, they don't lie. And it's a proven track record. Sun Life has had this account since 1871. You know,
okay, I have one question for you before we go to somebody else. It was like, I know you did the example on like 19,000 a year.
Yeah.
So what is the minimum that you can put in?
So the minimum on this specific account, there's 3 different par accounts. This one is, I guess, the regular par account, meaning that it's at a lower level. So it's called, my God. Anyways, I'm drawing a blank. We as adults start at $50,000 of life insurance. So whatever that number is for everyone. Children, you can go down as low as 25,000. Okay, so just think about a child's policy. If you get it from when the child was born, you pay it off in 10 years, how much that actually grows. It's pretty amazing. And that's a legacy that some of my clients leave to their children.
Okay, cool. So I'll put it out on their floor. Anybody got any comments, feedback, questions?
Harry, I have a question. So you explained you have to invest $20,000 a year for 10 years. So that's $200,000.
Yes.
And then it stays there for a couple of years. That's where the magic happens.
Yep.
And then you can get a loan from that.
Yep.
And technically, that's your investment. And you're telling us that you're getting loan from your own money. How does that work?
So insurance companies have this magical power of being able to do a lot of stuff with life insurance policies. So for the sake of argument, this is a life insurance policy with an investment component. Okay, so that $20,000 a year, if you invested that into the market, I can put them side by side. If you invest that money into the market, or you put it into the Sun Life Par account, life insurance, year over year, Sun Life will outperform the market. And the reason being is that there's a life insurance component on it. So those first couple of years that you invest $20,000, $40,000, $60,000. Now, again, this is just an example. That policy, if you were to die, is worth $400,000 to your beneficiary. If you put it into an investment account, it's only worth $20,000, $40,000, or $60,000. So that's why you have to take a loan on it, because it's an insurance policy. There's a component that allows Sun Life and a couple other insurance companies to have policies like this, so that people can actually loan against their insurance policies. It's been going on forever.
Thank you.
Anybody else?
Is there any other vehicle or other insurance vehicle that does the same?
Universal life policies. This is still stronger than a universal life policy. It really depends. Again, I go back to this. It depends on the client, what their budget is, and what the goal is of what they want to do. The goal is very important. So if the goal is to leave as much money to your beneficiaries as possible, then I know which direction to go. If your goal is to store cash away so that you can pull it out at any point in time, there's another vehicle for that. Every client's different.
Okay.
The question I have then is, say we have multiple life insurances. Can we come and talk with you about advice on how to look at that, leverage it, or is that not your expertise?
Depends on the insurances that that person would have. I can definitely look at other insurance policies. That's not a problem. Yeah, that's a different situation. If you've got a policy from RBC, you've got a policy from Manulife, you've got a policy from Sun Life, I can talk about them. I can't merge them all together. A broker could do that, with the exception to Sun Life. If you've got a Sun Life policy and you have a broker that can take care of a multitude of insurance plans, they cannot pull the Sun Life plan over. Sun Life has ownership of that policy if you wrote it with Sun Life. It's their ways of grabbing you as a client and keeping you. Anything else?
You've left us all speechless, Terry.
Yeah.
So Terry, you can set some of these up for your grandkids or something, I guess, eh? I mean, if
Yes.
you wanted to, you talk about the legacy. I'm assuming that's what that is leaving something for your grandkids.
Yeah, absolutely. That is something that, well, I'll use my mom as an example. That's what she did for all her grandkids. She put life insurance policies on them. So my daughter's policy will be paid up this May, and my son's policy will be paid up in 4 years. So she's leaving that as a legacy to my kids.
And that continues to grow, though, eh? Even though there's
Yeah.
no more premiums, it continues. That's kind of cool. Yeah.
Yeah, that's well, I can show you really quickly because I had it. Okay, so this is, I'll just show you really quickly. This is a policy I put on a child. started at age 0. $100,000 coverage is $268 a month. Now, again, you don't have to start at 100. I just did 100 just because. After 10 years, the policy is paid up. And you started at $100,000 when the child is an adult. And we're going to use age 60 at the top of the page. That policy has grown to $831,000. So yeah, it grows, and it's something that is, you know, if the grandparent can do it, then I highly recommend it. If they can't and they just want to do something, again, every client is different, and we can figure something out.
Cool. Okay. Are we good? Well, I want to, you know what, Terry, I want to thank you very much. It's always very enlightening. I wish I had started with insurance and stuff back when I was 20. I think that that's the advice I give to everybody when I chat with all the young ones coming up. It wasn't a big, in our family, when we started out, it wasn't that a topic that was really talked about that much. So I think it's great that everybody comes on these nows and shares your expertise, and we're able to spread this word and offer some ideas even to the people that we know that are looking for great investment options and leaving a legacy to their family. So that's very cool. Thank you so much.